Good morning. Let me see that it is all up and running. Testing the microphone, that looks good. Testing the streaming, just waiting for the streaming to start in YouTube. Yep, that's started. So we will um, just show the disclaimer and we will get underway. Okay, all Bookmap Limited materials, information and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Trading futures, equities and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Just go back to me again. Quick bio, but we can move on from that. Um, get the screens up and running. I don't have any specific slides that I wish to present or talk to tonight, but I do have a couple of topics that I've put in the Discord room. There are a couple of topics I want to dwell on. The first is something I mentioned when I was talking about the preparation of oneself for trading in an ETH session, and the second one is something that covers every single tool or platform that you use. So the first one really is all about this concept of, are you personally ready for trading? And I want to talk about it with respect to one particular focus which is not dwelt on enough. And the second topic is market generated information. So that topic, we're going to talk about things that I believe are objective and do factor into your analysis and eventually your setups and your edge, i.e. what is market generated information. Anyway, I'm just going to quickly stop and mention that I will take questions. So if there are any questions that are either in the Discord channel or in the YouTube, let me know. I'm looking at the YouTube now, so I can see there are no comments right this second. Yeah, before I get into those topics, let's just have a look at the live action in ES. I've got NQ above it, so I'm looking at both at the same time. But I know that we are just showing you ES, and we can see an iceberg here that they are pushing towards the liquidity up above at 58.59. I'm just going to get my little tool, my drawing tool, because it's not visible to me at the moment. Where did you go? And yep, so they are pushing slowly up there. Come on, where are you? There you are. Let me just drag it so we can all see it. Yep, there it is. Okay, so what am I talking about? So let's just, so we've got the liquidity there, and we've got this resting iceberg here, which has quite a significant number. That at this time of the day, we've talked about this before, a smaller number than that would be considered significant, but when you're talking about 487 sellers being absorbed with this buy ice, and you're looking across the line and seeing that we have a total of 786 actual sellers at that price, not just the iceberg, and we have the liquidity above. If we zoom in, you've got this liquidity much higher up around 4480. That could be the eventual liquidity push target, but at the moment they're just trying to push to this liquidity band here and then maybe another one slightly higher. But you've now got three ICE there, so they are really trying to advertise the fact that they want to push it into that liquidity. For future reference later in this talk, that is market generated information, but we will talk specifically about how the icebergs and the stops can be used, or when they can be used, if at all, in that market generated information. Sometimes you have to ignore them, sometimes you have to, or it is often wise to take them into account. Okay, right. What I like to do, as I say at the beginning of this, I'm not going to do a screenshot here, I'm just going to drag this across. Just want to, I was watching a video earlier today of somebody doing some analysis, and I just want to make sure that we're all aware of it. So this is the daily trend for ES. I've previously spoken about a longer term trend line and a steeper, more aggressive trend line on the daily. And you can see that we've broken the steeper one, so we're out of that steeper uptrend. We're now right at support on the longer term trend lines, and this one's been going on for a few months now. So that is a pivotal moment. On NQ, we are actually through it, or I don't treat these lines as exact, but I'm just saying we're at the same kind of pivotal moment. So we're at a line in the sand on that, and again, we can consider that to be one type of market generated information that we can talk about. But it's just interesting to note on the daily that we are transitioning potentially from an uptrend to either chop or a downtrend. Or we may just bounce here and continue the uptrend. So yeah, all three possibilities are in place. Okay, we can, a little bit later, we'll go through the action in the ETH session as well. But you've got TradingView over here on the right, so we can talk about it. And yeah, we can keep watching them absorb sellers and push it a bit higher. Okay, let me see, just double check, no questions. No audio. Okay, no audio no audio in Discord. I apologize, Tom. I apologize. That was a Discord issue, not a YouTube issue. So my apologies. I had to create the event as well today, not something I normally do. So apologies, I was a little bit rushed getting the streams up and running in Discord and YouTube. Hopefully you can hear me now. I'm guessing that you can. Okay, checking. No, okay, right. One of the things that I mentioned on that presentation a week or so ago about preparation was preparing oneself, and I talked about either or both of being calm in mind and calm in body. There is an awful lot of stuff around on the internet, in books, etc., about mindfulness and meditation, and the two obviously go hand in hand. There is a lot of that around. I don't need to say any more than that. It's certainly one method to quieten down the voices in your head when you're in a trade which isn't necessarily going in your favor but has not yet broken the point at which you wish to reject it and exit, i.e. your stop. I want to talk about the other thing that that I think plays a part in getting yourself physically ready for trading. There was actually a very, very good Netflix video. I don't know if anybody's been watching it. I don't know if anybody here follows the Tour de France or cycling in general, but there is a documentary on Netflix at the moment called Tour de France Unchained, where they spent a lot of time with the teams during the 2022 Tour de France. And there is this wonderful interview with a character called Wout van Aert. He is one of the best cyclists in the world still back then and right here and now. And he's talking about what sets the very, very, very top riders apart. And I think it applies equally to any sport. And I do consider day trading to be a sport. I know we also call it a casino, but it is also a sport. And the thing that he stressed was that a lot of the time there is a lot of pain. So in cycling, it's quite easy to visualize the pain that they're in. Their body is screaming out to stop as they're doing a time trial or climbing a mountain or whatever. And in a similar way, or in a corollary fashion, our bodies, our minds, our inner voices are screaming out at us just as we've entered into a trade, and they may be screaming things out to us such as, oh God, I've got 1 point, I've got half a point. Let me get out of this. I don't want this to turn into a losing trade, etc., etc., etc. Or those voices may be asking you to flatten too soon, to doubt whether the setup that you took was valid. The voices can be a million and one things. But one thing I'd like to stress, which again is this parallel to that Tour de France video, is that we will be in pain, or we are very likely to be in pain, and that the levels of pain will differ widely or very, very widely between individuals. So, you might be a swing trader and are expecting it to go quite a long way against you, and you have very little pain. You might be a day trader with a very, very large position size, and the pain begins instantly from the moment that you place the position in the market. One thing, I mean, I would like to point out, or I'd like to say, or own up to the fact that I am not good at mindfulness, or sorry, I'm not good at meditation. I've tried it. I've tried various courses. I've got an app on my iPhone which has multiple meditations, but I personally am not very good at it. Um, One of the things that goes through my mind is, I've got 5 million things to do and I want to go and do them, and I don't want to sit here and just breathe for 10 minutes. That's just one of the issues that I personally have with meditation. But one thing that I do find that helps me prepare for the trading session is the amount of pain that I experience when I'm doing my physical exercise. I've mentioned previously I've done quite a few triathlons and I still do the individual disciplines, even though I don't compete or anything like that anymore because I'm simply too old. Um, but for example, this year I'm now at my 20-year anniversary for long distance running. And anybody that's done long distance running knows that it often becomes all about pain towards the end of a race, or if you're just not in the right condition on that day, whether it be your stomach or your head or your legs or whatever it is, but you need to finish, there will be a lot of pain involved. And I find that does help with your trading. If you know what that pain is and you know what it's like to push through that pain, um, that is enormously helpful in dealing with these crazy voices that go into your head when you are day trading and you've entered into this crazy casino. So it's just one thing that I'd like to point out. It doesn't have to be something like running or cycling or whatever. It could be anything that you push yourself to. It could be any pursuit that you have and that you do. I mean, I suppose that you do that in a mindful way. Maybe I run in a mindful way. I'm not 100% sure, but it's the idea of putting yourself out there, accepting the pain, and pushing through that pain. I think, sorry, my microphone's too close. I think personally that is as good as mindfulness through meditation, um, just because you know what it's like and you know that there is a reason why you're doing this and why you'll push through it. Okay, enough about the semi-trading stuff, and let's get back to trading. So we've held this iceberg here. I'm just having a look. I'm just zooming back. I think I mentioned in my Discord channel that I'm always zooming in horizontally and vertically, and that I've got things like these time charts so that I don't need to worry about maintaining a view of where we are in terms of time. I think Tom often does it as well. He often zooms right into the microstructure, and I like to do that as well. But I do also like to zoom out and see where some of these structures came into place, especially the resting liquidity. Yes, as we talk about, I might have a sip of tea. My voice may be a little bit hoarse today because we just had an event in Australia. I think the whole nation was screaming for the Matildas. That's the Women's World Cup soccer team, and I was actually screaming for the English team because that's where I grew up. But the voice is a little hoarse. Excuse me while I have a sip of tea. Right. Okay. Okay. So if we I won't get a pen and paper out. I'm just going to start talking about what I see as market generated information in ES and NQ during the ETH session. And in bookmap terms, the very first thing that I mention is the resting liquidity. It is a clear advertisement for where the players would like to be. And you can see, even if we just zoom out the whole picture from 1800 New York time through to now, the resting liquidity once again has acted as a bounce. So it's attracted price 1, 2, 3 times. You can see that liquidity there at 4444 or 4443 has been there all day. And that's acted as a boundary for price. So it's one of the very first things that I'm going to mention is something that's clearly objective, even though it's an advertisement. Even though we take into account that it's only an advertisement, it is information that I believe, certainly in the ETH session, is useful enough to be considered as market generated. There will be obviously an argument saying it's not market generated because there was no transaction that was conducted at that level, and that is true as well. But since this is a game of non-predictions, something again I say every single time, we cannot predict the future. It is a large piece of evidence, or a medium-sized or significant piece of evidence, and the longer that liquidity has been resting, and the larger the size, and the further away it is from a round number being the 50s and the 100s that we've talked about, the more evidence or the more evidential weight that I would place upon it. So I would say in bookmap terms, that is one that I use an awful lot, and you'll hear me describe that in every single one of these webinars. I'm just having a look at. Okay, the next. Okay, let me. I need the crayon so I can talk to both bookmap and to the time charts, the 3-minute ES and 3-minute NQ charts. I'm making sure I've got a crayon on this one. All right. The next thing that I believe is market generated information is a swing point, something as simple as that, and that sets out to me where players were stopped out, where the supply and demand came in, and it relates specifically to a setup which consists of 3 separate individual setups that I've discussed previously, which is the test or retest of a supply and demand zone. So wherever we get these, and I was slowing down there because I was actually looking at where this little swing point was in relation to the VWAP bands, and we can talk about those. I think there's actually a couple of really good videos on developing VWAP that are free out there on the YouTube. If people want me to mention or recap what they kind of say, let me know and I'll do that. I also give you my views on this concept of developing value area and VWAP and the standard deviations and how you can use them in both ETH and RTH. So we have this swing point that we see in the time charts, whether that's a 3-minute, and we can zoom into the 1-minute as well. And what I always do when I'm looking here is working out what was traded around there. If there is a large trade around about here or ES or NQ, there is a large probability that will get retested. So you've got 2 pieces. What I'm trying to say is you've got 2 pieces of potential market generated information at every single one of these swing points, and they're available to all of us. It's available free of charge. I mean, for example, in TradingView or any other software. I will rephrase that. It is available free of charge in TradingView. I personally pay about $9 a month on a yearly basis. So I am paying for it, but I'm just saying it's freely accessible to all people, and that relates to, or that can give you an edge, which can give you a multiple of the dollar risk that we put in place on each of these trades. And what I'm trying to help people with, or trying to help, maybe I'm trying to help myself as well with these sessions, is to get you focused on the risk reward and trading at the points where the clearest market generated information is available, so that you have the best chance of maximizing the opportunity and not just walking away with zero point 0.5 of an R or 1 R, but getting more than that. I think one of my best Wyckoff teachers put it this way. He said, you always want, or sorry, the most ideal point of entry is as close as you possibly can to where you know you are wrong. And I use the word "know" in inverted commas because obviously we don't know anything in this game. We have suppositions, we have probability-based analyses, but we don't know anything. In the sense that we do know anything, yes, we know that that was a swing point, that was a swing point on this 1 minute chart, and this was a swing point. And here the ES is giving us a nice example. Say you have this market generated information that was here at 544, 545, and we can go and examine that in Bookmap. Now, if we just go back, that would have led you to a potential 2 trades in that. I'm not saying that they would have been valid setups, but there were 2 potential setups in that zone. And then once it was broken, there was a potential for a trade I don't discuss very often, which is the breakout trade. So let's go into this 545 market generated information and have a look at it. Sorry, I was going the wrong way. It's interesting when you are trading ETH and you're doing it in a time zone other than the one that you live in. I've experimented with having charts in my time zone, which is Western Australian Standard Time, which is also the same as Singapore time or Beijing time. But it just doesn't work for me. The only thing I currently have on my own time frame on my computer screens is the financial juice feed, which I've gone back to my own time just because the browser does not work well if you adjust it to a fictitious time zone, and my journaling. And that's something I will talk about in another session when we talk about timestamp journaling, what it is that you really want to start writing down. Okay, here we go. I'm also looking across. I've got a high level snapshot of what was traded at these points. So I know that coming into this 545, before I zoom in here, and these are delta dots, one of the reasons why I've got something else in Sierra is that I like to know the size of volume on those trades coming down into this 545 swing point, and I can see straight away. I mean, maybe I should turn these into trade dots so we can have a look at them as well. Let's have a look. Total volume dots. Okay. This is just so that we can see what was actually traded. I can see going into that, into this swing point was 182 sell, which is a breakthrough of this breakdown through this liquidity, and then we had 3 individual sells of 60, 74, and 74. And if we look in Bookmap, we'll get the actual values. So the ones I have in Sierra are just approximate reconstructed values, but here we can see, for example, that's actually much more accurate than the numbers that I had in Sierra. So basically we had a trade of 214 at that swing point low at 5:45 a.m. Eastern time. And when we have that, and we know that we've got some liquidity resistance potentially up there, we know that the probability is, and again, it is up to you individually to determine the probability, or to fact check anything that I say as a supposition. The probability that I have determined from my own analysis and research is that when you have a very large trade, it will more than likely be retested. Even if we never get back on the other side of it, it will often come back, retest, and then move away or break through. That is a core of the concept of supply and demand. It goes hand in hand with me saying, for example, that there was a demand zone there, that when they come back and test there, they clearly would want to go and buy it again. But on this occasion, it did turn out to be a demand zone, at least initially. So if we draw a line across, so you've got, I haven't got my tablet up and running, so I'm just going to do this with a number there. You've got 214. You're saying there's a probability that they're going to retest. Okay, so that is, where's my little thing? This here, oh, it's pretty badly drawn again. Let me get rid of that one. Right, do it again. That there is market generated information. I think I've mentioned previously that I do swings, I do smaller swings or micro swings, and I do scalps. And it will depend on the context and condition of the actual overnight session, which or all of which I'm willing to do. So, for example, on this session, at that time of the day, we were between about 60 and 70% relative volume. So I was certainly happy enough because it's the European session, not the Asian session. And again, I'll restate that the European session tends to be more active than the Asian session, and there are also more instruments that I can use for correlations. And you also have the pre-market opening of the large ETFs and VIX, which happen about an hour after the London Open. So, in other words, I'm more willing to take smaller trades in the session post London Open, i.e. that session between 3 a.m. Eastern and 9:30 a.m. Eastern. So, yeah, the background for why I just said that is because with this market generated information and the likelihood that we're going to retest that zone here, um, in the pure scalping sense, we have a high there, and we have the reverse spring or up thrust here, where it just takes it out and fails there. So I would be looking more in that zone there where the liquidity was, but I'm just saying that there is a scalp or a micro swing back to the retest. That's one potential trade that you can look at. Again, it's the same kind of concept of a spring, just in the other direction. In Wyckoff terminology, that's called an upthrust. It's a breakout failure. So they're pretending or faking going upwards, and then they trap the late buyers and they move them back down. And the target there is the retest of this MGI or the 214 trade swing point. Just going to stop. Old Gringo, yeah. I just put the 1 minute on for a second because I wanted to look at more of these micro swings because we're looking at ES. If you've listened to this channel before, you know that I trade more NQ in the ETH session than I do ES, but for this purpose, I'm looking at ES, so I'm looking at the 1 minute so I can have a better view of micro swings and look at more things to talk about. Okay, let me just get rid of all of that. Okay, draw that one across. So the other trade there, as I said previously, it turned out to be a spring, but it's a retest of that demand zone. So you've got trade, come on, you've got trade 1 there, and you've got trade 2 there. These are just potential trades, and the trade 2, the target would have been up there. That would have been a better trade in hindsight, but everything is wonderful in hindsight, and we are not hindsight traders. What we're aiming to do here is have analysis that you can apply in real time, every time, and not just by looking back at the market a couple of hours after it occurred. Okay, what are we doing here? We are looking for some of these really large points. I was hoping if we get a really large trade to look at just in this bit here before it broke down, because when you get a really, really large trade, and I'm just looking across at Sierra on this one. No, it wasn't very large. It was about 606. Yeah, well, again, I was trying to use another example of a very large trade as an MGI and also as a line in the sand. So, for example, if you had a, that's quite large there, that's 352. Let me just draw over that one too. I also want to have a quick look at what that looks like on the delta dots, because if we're looking at these as delta dots most of the time, we're not going to see that. What I'm saying is that there is market generated information of a breakdown point that creates a clear line in the sand. In fact, you've got a whole bunch of trades here, and you've got that the iceberg that I think we mentioned when we first started talking. Yep, sorry, we did actually. Yeah, when I first started talking at 8 o'clock, we were talking about this iceberg and then pushing it down towards the liquidity. That then became a market-generated information line in the sand. Once that was broken, any retest back to there was a potential trade, because that is a clear line in the sand, and there is no individual price that constitutes that line in the sand. It's a zone. So every time it's a zone. So in this case, it's, come on, crayon. It's that zone there, that whole zone, and it comes back to retest there. They add a massive amount of liquidity, or massive at this stage of the day, plus 255, and then they take it down. Okay, I have another sip of tea, and happy to answer any questions as well. Excuse me, that was my teacup grinding against the microphone. Okay, let me just pull down. Let me pull down NQ and show you a really, really good example of why you might want to trade NQ for clearer signals, and I suppose the word is faster, a faster determination of whether you're right or wrong in ETH. Okay, so we're talking about the same kind of time frame. We're talking about just now, 8:30, 8:31. You've got the same concept of a spring. You've got a swing point low here. We draw again. We have another different type of market generated information. You've got both a large trade, and we have to ignore when it says volume because these are delta dots, and you've got a big stop run. And what I really like on, that is moving, so I'm going to have to get rid of that. What I really like, and if we zoom out, zoom in vertically, is this little line on the Bookmap stop iceberg indicator. That little line shows that price went straight from there all the way down to there in a heartbeat. You know, if we zoomed right in to the microseconds, you can see that the price didn't trade until it went down to there, so it skipped a couple of price levels. If you go back to some webinars where I was speaking about last year, I think it was, yeah, at least it would have been last year, I often had sweeps around here. I find that I can see those sweeps, and I kind of want to see the stop iceberg information at the same time. And since I can already see them in my own head, sometimes you get the added visual information of this vertical line. That's what I'd call a sweep stop run. I don't need extra information to tell me that that's a sweep. I can see clearly by the vertical line they're swept down. We've taken out the previous swing point low. That is market generated information, which is both a large trade and a stop run. It's at a swing point low, which is a previous bit of market generated information, and you've got this resting liquidity above, even though it hasn't been resting that long, but you've got clear liquidity above, which becomes a target. Okay, so yeah, we've covered two different ways of looking at that of that resting liquidity and how it can be used as market generated information in two completely different senses. So you have situations like this where it becomes a target for one of your valid setups if you're into this supply and demand type trading, and provided this is in a setup location for you that you're willing to take, regardless of whether it is on the larger term profile a good area or not. That's a clear spring in Wyckoff terms, and you do have a clear target. So you've got the target from the liquidity, and um, you've also got this banding below in ES. I think I'm going to have to move this one away. You've also got, I think that you've got this here where you've got really, really thick bands of liquidity. And I think I was watching another video from one of my colleagues, Charles, aka Pirate Traders, 2 days ago, I think, when the market was very, very low going into the RTH Open, but they had a massive band of liquidity there. And as you rightly surmised, and as it turned out, that the information or the market generated information that he received in his head was that was more likely a point which they would not be able to go through and would more than likely to reverse. In other words, the liquidity is too thick, and what they're trying to do is accept anybody willing to sell down to them there before they trap them and take them higher. So so there are two types of information you can get from this resting liquidity, and again, it is useful. It is more useful depending on the size of the liquidity and how long it's stayed there, and whether we are talking about liquidity at round numbers or not. Okay, I'm going to get into the profile as well because we always talk about the profile here. And I just want to clarify a couple of things as to why my profile charts. Okay, this is an ES profile, and again we're talking market generated information here. You could say we've got a lot of liquidity, or sorry, not a lot of liquidity, a lot of volume between here and here. So why have I not chosen to draw a composite value over here encompassing the last X days, whether it's 10 days, 15 days, 90 days, whatever, or why haven't I started, merging a profile, merge with next profile in that sense? Why haven't I started doing that? Why, let me just reset that again. Why am I not taking each of these little bits as potential market generated information? Okay, that is not how I look at profile. I'm very much a high level participant when it comes to looking at profile. In fact, let me clarify that a little bit more. I look at profile from a very, very high level and a very, very micro perspective, and relatively little in between. That's probably the better way I say it. So, for example, if we look at these dailies, you've got the volume area high and the volume area low that just marked out there with lines. I've got no idea about that. I never use it. It's just there for coloration to show me roughly where value was on that day, so I can see at a glance that we had 3 days with value around about the same area. That is about it for me as regards my high level profile analysis. To me, that is not really market generated information, in the sense that I do not get any additional information than I get from my time charts on those. Let me have a look, see if I can get this to be relative volume. Yep. Okay. Where I okay, just ignore the shaded last one because that is a bit out of proportion with the rest of them. Where I do get a lot of value from is here. You have all profiles relative to each other, so the actual shape is truly indicative of the amount of volume with respect to every single day. So if I see something like this where there's a massive amount of volume at a certain point, which is likely to be tagged the next day, that to me is market generated information, simply because it fulfills two factors. It's objective and it clearly stands out. And in the same way, if we had, yeah, I mean, I think we had some good examples last week. If you had a really, really fat or poor high or low, I count that as market generated information. None of these really do. Um, I don't even really constitute a gap between that and that as market generated information, but a lot of profile traders do. A gap fill. Again, I've got other ways and means of trading into that gap or going for a retest of that gap, so that is not directionally actionable by how I trade in ETH. It's a nice to know, but it's not something that I can use time and again and again and again and again during the ETH session to get trades that have edge. So I just wanted to point that out, that that there are some really, really great profile traders, and Tom is a great one, and they'll look at these profiles in a lot more depth and detail than I will, but I am looking at it from two perspectives: one, a high level perspective, and two, an absolute micro perspective. And in my Sierra charts, I've got some very clear visibility of the profile that's forming in each session. I don't really need to show it because we've got people that do more of that than I do. Um, okay, right, 8:41. Let us go back to some analysis. Okay, let's see what is coming up. Trying to get my NQ to go to the end, but it's not behaving. There we go. Okay, if we have a quick look at the NQ here, and we look at a direct comparison of two liquidities. Okay, you've got this one here, which does garner my attention. It's at 15075, and you've got here one at 15100. I just want to point this out because this is a clear example of where I pay attention and where I don't pay attention. Maybe something you want to do as well. This one at 15075, it's not a round number, and it's been around for a very, very long time, in the sense that it's been here since relatively early in the London session. And the actual value involved, or the value of orders involved, is 82. Anything above 30 in NQETH is significant in my eyes, with regards to resting liquidity. Anything as high as 82 becomes very interesting to me. So again, it's something that I mentioned last time. I'm not expecting that to get tagged straight away. If it goes straight down, wow. But that's not a setup that I am in at the moment, or that I'm going to jump on board and follow the momentum down. But what I want to do is contrast it with this at the round number of 15100. It's a round number, so my first instinct is to ignore it. It looks like just liquidity at a swing high, so it's trying to say, oh, if you get back up there, we may provide volume or transactions, but it's not been there for a very long time. So I just want to contrast the two. This one, maybe if it had been around a little bit longer than 5 a.m., maybe if it had been around since 12 a.m., so 8 hours, I would place quite a bit more weight on it. And I already do place more weight on it than this, but I'm just saying that if it had been around for about 10, 12 hours, that would constitute clear market generated information to me from the Bookmap heat map in ETH. Let me just see. No questions today. That's fair enough. Right, let's have a look at what is going on. Okay. So we've got industrial production coming up at 9:15. We've got relative volume at 69%. We've basically not got that exciting a market. So in terms of this market here, I'd be looking at more NQ than ES, and I'd be looking at scalping shorts to get down towards that liquidity, where they've just added some more liquidity there. So again, we never chase. We never predict that it's going to go down and tag those, but we do look for setups that will give us an edge with a target being there and scale further of there. So that's what we're looking at. Then we go across at ES and see, does that line up with what ES is doing? Then we have a look at the DXY, or the US dollars. Does that line up with that? At the moment, if we look at ES, yes, there's lots of liquidity there. We know there is some liquidity up above as well, but the closest liquidity is below, and there's a significant amount of it. It may just be that it wants to fill this and shoot up higher to the other liquidities, but it is showing interest in those for the time being. The US dollar has been on a significant uptrend all day, in fact, for the last few days. It's above 103 at the moment on the DXY, and DXY is just the easiest way I have of tracking it during the 24 hours. I do also look at the futures products, 6B and 6E during this session, and 6J during the Asian session, and I also look at gold, as I've mentioned previously. Gold has been going down today, the US dollar has been going up. The US dollar has been inversely correlated with the ES and the NQ in ETH, so both of those are correlated factors that help with the NQ proposition or supposition that we will go and tag the 15075 layer eventually. I'm also looking at book pressure. Somebody wanted to mention, somebody was asking in the room, the Discord room, about the market pulse, so maybe we should get that on the NASDAQ one and have a look at how useful that would have been. It's going to populate slowly now. Yep, there we go. Okay. I brought the market pulse on, and I'm just going to drag it back onto the screen here so you can see what I just did. I have placed the market pulse for NASDAQ in the subchart just here, because I want to talk about indicators generally and whether they are or they are not market generated information. Sorry, that one's at whack. Okay. All right. Indicators, I mean, the market pulse is objective in the sense that it has a level which goes from 100 to minus 100, or 100% to minus 100%, and it is showing you the price change in the last short period of time. Again, it's an indicator just like any other indicators that are out there. In the same sense, it's looking at an average of price over the last X minutes or X seconds. In the same sense, that falls into the same kind of category as any other oscillator, be it an RSI, and it's again not far removed from things like a moving average. I don't count those as market generated information. I count those as a derivative, a mathematical derivative of price. The VWAPs over here, they're basically the same category. The only improvement they have over whether they are a mathematical derivative of price or not is that they are directly related to the amount of volume that has been traded. I trade volume and liquidity. We are slowly getting down to that 75 level that we're talking about. And if you were looking for a setup, you were looking at this zone here as the reverse Springer up thrust, and you've got a couple of successive ones. So if we go back to the 1 minute and look at the NQ on that and see what you might have been able to get in. No, it's really quite micro, so yeah, you can't really see the swing points as clearly as you can in Bookmap. That's an advantage of why I zoom in and out where I have a supposition. I mean, say I got in there, or I got in there somewhere around there, and I was targeting down there. And I've mentioned to you previously, let me get the crayon out. So we're saying that we get in around about here, or we get in around about here. You're never going to get the high. And with NASDAQ, more often than not, you're going to enter by market. Or sometimes you might even enter by stop buy or stop sell entry orders. It's one of those beasts where I don't feel entirely comfortable leaving limit orders for entry. I know you're going to get a better price, but NASDAQ is a fast mover and it's not going to punish you too much for having a spread entry. With market, you could be -3 ticks, even -4 ticks straight off the bat. But because it is such a fast-moving market, I have to get rid of those things. They're out of position already. And draw another one. That's why I'm saying that your entry is more likely to be around about this sort of zone here or this zone here. But you've got a clear, you've got two potentials there for your stop there. You've got a stop about this zone here or a stop behind the liquidity up here. I think I mentioned that I'm not a great fan of this liquidity because it's at 15,100, and I also prefer tight stops whenever I'm trading NQ in ETH. I'd rather be wrong straight away and accept that that means it's going to reduce your win rate. But if you took a stop, say you got in at about the 93 and a half mark, if you took a 4-point stop or a 5-point stop, say even a 5-point stop to the 98, and then you traded that down there, just draw that one in, so about 93 and a half, 10 points. So for a 5-point stop to 10 points or close therein, if you get close to that 2R on any individual trade in ETH, other than the ones that just go and go and go for you, getting a 2R is a good result, and it's worth doing in my personal opinion in NASDAQ in ETH. It works in the sense that you're taking a fair number of trades, so you're giving your edge a chance to play out, and you are not getting fixated on the home run type of opportunity. And I think if you were to get into trading ETH, it's one of those things that you don't want to spend your whole day waiting for that home run type of opportunity, because you're just going to end up getting frustrated, and then you're not going to accept or respect or honor the stops that you put in place. If we just zoom out vertically, I have to remove that there and just draw it again. So say you're in at about the 93 mark there, right? This is a product, if you want to trade it, this is a product that can go 20 points against you in an absolute heartbeat, right? So if you were playing for a 2R of 10 points, you can do the maths, and we can both do the maths here. You do not respect your stop. So for whatever reason, you pull your stop, you move your stop, whatever, and at 20 points, if your R, say your R was $200 based on 5 points, whatever that is, that 20 points is $800. So you've effectively, if your R is 200, so I should have got my tablet ready, but you have effectively lost 800 if you accept your stop there. And you could have made 400, which was 2R. And instead, you've made -4R if you are wise enough to at least accept your stop at that point. So what I'm saying is that by not accepting your stop, you have destroyed your trading system, and you have not respected the edge that you could be executing. So it is one of those things that I personally believe if you're going to trade NQ and ETH, you take smaller stops and you take a lower win rate. The other type of thing that you often hear about, and it was mentioned in Tom's room the other day, was people doubling down. So, for example, if that 20 points became 30 points and you had entered in at -10 points, and then it went to 30 points, which NASDAQ can do in a heartbeat, and it's going to hit the 75 that we're talking about, that is a complete destruction of your account. That's just my personal opinion, but I just wanted to have a very quick look at the maths behind not respecting your stops and what that does to let me just
NQ sell 89 stop.
Let me just type this in. So what I believe might be, your results during an ETH session or during your week session. All of that line there, R, 2R, minus R, minus R, minus R, 3R, R, 2.5R, that's all fine as part of your system, because the loss that you're taking on every occasion, unless you're managing to break even on a trade, is exactly the same. It's that minus 1R, and that overall will give you an edge. Uh, and if you're taking these trades which are clear setups and that occur again and again and again, ETH, it's removing your frustration. It's giving you participation in probably the cleanest price action during the course of the 24 hours. But again, it's something that you have to figure out whether it's something that you want to do or not. It was just a thought. I will move on. Okay, let me get my arrow back so we can get back on ES. So what did we? So we were ignoring that liquidity to start with, and we were looking for reverse springs or up thrusts or tests of the supply zone to get us down to that 75. And I have the market pulse here as an indicator because somebody asked about it in Discord today. So let's just have a look on NASDAQ. I think market pulse is better on ES because of the thickness of the instrument. But if you said I am just looking for a short, right? As soon as we'd got down to, say, this point, we'd had a breakdown. I will not take a short unless market pulse gives me a nice green signal, i.e. it's above 70 on the minus 100 to 100 scale, i.e. the green shows that it's above 70. So you would have got in, where's that crayon gone? It's a daisy. You would have got in, come on, it's not drawing for me. Try again. You would have got in there. Right? So does it have its purposes or does it have its uses? Yes, it does, provided you have clear steps in your mind and you know what you want to do. It is one mechanism of getting in. Is it market generated information? Not in my definition of the term. Can it be useful to you in executing your edge? Yes. And I have it displayed more on my ES than I do on my NQ, but again, that's partly because the NQ is a thin beast, and I do like looking at the liquidity a lot more in NQ. Okay, let me get rid of all of that. And back to the arrow. Let's have a look at ES again. Okay, so ES is now grinding its way, and it does grind, doesn't it? It's got a nice little resting iceberg there as a target. It's broken through the sell iceberg, and it has taken out and actually interacted with some resting liquidity there. So you can see a volume of 328, which suggests, yeah, that's just because that is touching 239 followed by the second one, that did interact with the liquidity. So one supposition could be, if you were bullish, that they're into a demand zone and they have been partially filled for before the RTH session, that they're getting filled so that they can go long and squeeze out some shorts during the early stages of RTH like they did 2 days ago. It's one supposition. I don't make any suppositions, and I do not predict what will happen at RTH. It's also very different from the very, very, very thick liquidity band that was in play 2 days ago. I mean, if we look here, that's nowhere near as thick. So I don't think quite the same game is in play. We might have a nice little bounce and tag that resting iceberg above, but yeah, it's just one of those things. Anyway, I hope the session was useful to some people. And yeah, it's coming up to 9 o'clock. What time is it exactly? Oh, we know we've got another 50 seconds, so we can watch ES, and yeah, we can contrast the volume dots with the delta dots. If we put those back as delta dots, move that out of the way. Yeah, I put in the suggestion this week in the suggestions channel that there be a hotkey or a button on the toolbar somewhere around there to quickly toggle between between volume dots and delta dots, and feel free to upvote that suggestion if you like it. The reason why, it goes hand in hand with what I said earlier, that they do love to retest large transactions in ETH, and quite often in RTH as well. So to be able to quickly see the exact number of trades in the transaction and flip back to delta, I think could be quite useful. Anyway, thank you very much for attending. I will stop the webinar there.